With the relatively high interest rate environment and a shortage of houses on the market generally, some buyers have suspended their search for homes or even left the market entirely. One approach that might offer some relief to buyers in this challenging market is to assume the mortgage of a seller with a relatively low interest rate. I will discuss some aspects of this process in this video, but before that, please check out this brief disclaimer. This is Ryan Ramsaran, an attorney in Palm Beach County, Florida. Welcome to my channel. The purpose of this channel is to provide general information about the Florida real estate market. It is not designed to provide specific information tailored to any individual real estate transaction. If you need this type of information, please consult with your own attorney, real estate agent, property insurance agent, settlement agent, or any other service provider that you choose to work with for your particular situation. The viewing of content on this channel does not create an attorney-client relationship between the viewer and the law office of Ryan A. Ramsaran, PA. Although every effort is made to provide accurate content on this channel, because the Florida real estate market is so dynamic, there's no guarantee that the information will be accurate when you view it or will remain accurate in the future. The law office of Ryan A. Ramsaran is a title agent with Attorneys Title Fund Services LLC and issues title insurance policies underwritten by Old Republic National Title Insurance Company. The firm also represents companies and individuals in the acquisition, sale, and development of commercial property, such as hotels, warehouses, and industrial property. If you believe my firm might be a good fit to represent you in real estate matters, please see the firm contact information under Details in the About tab of this channel. In addition to real estate matters, my firm also accepts personal injury cases, as well as cases related to the violation of individual civil rights. Please note that these cases will be referred to another law firm. However, under no circumstances will the client be responsible for paying fees or costs in addition to what they would be paying if they only hired one law firm. Again, thanks for viewing content on this channel, and let's get back to the content we were looking at before. Thank you. Welcome back. So a mortgage assumption is when the buyer takes over the seller's existing mortgage instead of getting a brand new loan. If a seller is fortunate enough to have a low interest rate, then the benefit to the buyer is that the buyer also gets this low interest rate that a seller had. Now, as I understand it, currently the only mortgages on the market that have suitable mortgage assumption clauses are VA loans, FHA loans, and USDA loans. Here are some other things that you should know if you're considering this strategy. VA, USDA, and FHA loans have qualifying assumption clauses, which means that buyers can assume these loans under the same standards that they were originally issued under. It should be noted, though, that investors cannot assume these loans. VA loans can be assumed by both veterans and non-veterans. The difference, though, is that if the seller's VA loan is assumed by a veteran, the seller's entitlement is released and can be used towards a future VA loan. However, if the seller's VA loan is assumed by a non-veteran, the seller's entitlement must remain until the buyer repays the entire loan. VA loans and FHA loans do not have these entitlement considerations. One note of caution for sellers, though. If a seller decides that they want to have their loan assumed by a buyer, the seller should make sure that they understand what are the consequences, if any, to them if the buyer defaults on an assigned mortgage. One thing that the seller might consider is hiring an attorney to make sure that the seller does not have any liability in the event that a buyer defaults on an assumed mortgage. Or at the very least, the attorney can help explain explicitly what the seller's obligations, and rights are in the event that a buyer defaults. Lastly, there will almost certainly be a gap between the assumable mortgage amount and the contract price for the house. This gap usually must be covered by cash brought by the buyer. While there's no rule that prevents this gap from being financed, it is typically harder for the buyer to finance this gap since they are already getting financing to take over the assumed mortgage. Although it might take some work and patience to navigate the assumption process, a buyer who is successful might be able to take advantage of the favorable terms that the seller had when they got their mortgage, which might not be available under the current financial environment. You should note that the information presented in this video is of a general nature only, and you should consult with your own experts to determine if any of this could be applicable to your situation. If this information was of some use to you, please like and subscribe. Until next time, be safe out there.